Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, market is open on a slower note as expected, and we can see that Euro USD is standing at 1.0880. If you have watched my previous video, if you have watched the video that I uploaded on Saturday, then the levels are still the same. All the levels are still very much valid. Okay, we can see that dollar index is standing at 103.38. We have a resistance and multiple layers of support on the chart. We have a resistance around 103.6065 level, and market has been trying its best to break the level, but market has failed to do so. And we have support around 103 because of previous price rejection around this area. Then we have support around 102.80. Do you remember, guys, why 102.80 became support? Because it was the previous resistance which became support. And then we have the next support around 102.50. So multiple layers of support on the chart, and we have resistance at the top. But the problem is that, okay, we also have an ascending triangle pattern here. On Saturday we discussed about this. Ascending triangle pattern is a bullish pattern where we have resistance at the top and market continuously forms a higher low in the market, and formation of higher lows indicate that new buyers are joining, and at one point we get to see a breakout. So let's wait and watch whether we get the breakout or not on the chart of DXY. Today and tomorrow we don't have any big news for USD, so we can expect that more or less the technicals will dominate the market. The The next important news for Euro USD is coming around Wednesday. So till then we can expect that this will be a technicals market. So let's wait and watch. So this is the chart of Euro USD. So what do you see, my dear friends? Okay, so there is a total confusion regarding the trend of the market. If we look at the overall trend on the 1 hour time frame, you can see that overall the trend is towards the downside. But if we simply focus on the present trend here, we can see a choppy market, sideways market. Overall trend down. Present, what is the present trend? Present trend is sideways. And if we look at the daily chart, then we get a complete different picture. We can see market is trading in an upward channel. So all the three trends are present, okay, which is hilarious. So you must be wondering, you must be confused right now which trend you should follow. So my dear friends, the answer is in your trading style. So if you're a swing trader, if you have a busy routine, if you're a positional trader, if you just want to buy and forget, then you should be following the daily time frame. As we have already discussed in our previous video, that Euro USD is trading inside an upward channel. Beautiful swings are forming. We have a support at 1.0800, 1.0780. So if market comes to this level and bounces, you can just go for a buy, and you can simply be on the buy for 1 week, more than 1 week. So swing trader, positional traders, this is the time frame you should be following. This is the trend of the market you should be following. But if you are a trader who doesn't have any problem with overnight positions, then obviously you can follow the trend of the 4 hours time frame. On 4 hours time frame, we can clearly see a downtrend market. So let's say your trades last for a couple of hours to 1 day, 2 days, then this is the time frame you should follow. This is the trend of the market you should follow. And on the 4 hours time frame, we can clearly see Euro USD is in downtrend. Sellers are dominating this chart. So as a result, sell on rise. Listen to me carefully. Sell on rise, or the sell at resistance, is the best trading strategy that you can follow. We have already discussed on the Saturday video the levels here. 1.0950 or around 1.0950, we have the best resistance. We have the best sellers present around this area because of the 100 moving average, because of FIBO 50% retracement around this area. But before 1.0950, we also have resistance around 1.0925 to 1.0930. Because of FIBO 38.2% retracement level, 50 moving average, and our resistance around this area, previous support will also be acting as resistance. If we combine all the factors, whatever I just talked right now, okay, then 1.0925, 1.0930, this also seems to be a very strong resistance, very strong level where we have strong sellers present. Okay, so these are the two levels where you can look for sell position. You can take a sell, sit on the sell position for a couple of hours to 1 or 2 days. So these are the two levels. But before these two levels, if the volatility of the market remains very low, then obviously market will not have the strength, market will not have the power to climb to this level. In that case, you can look for sell position around 1.0895 to 1.0900, the red line that I have drawn here. 1.0895, 1.0900 is not a very strong resistance like these two levels, but still you can expect sellers to be present around this area. Why? Because you can see we have FIBO 23.6% retracement level, and the previous support will also be acting as resistance. So two factors, okay, sufficient enough for a sell position in a low volatile market. Yes, low volatile. So volatility of the market is very, very important. Probably you guys have heard me saying dozen times that volatility of the market plays a very important role. So if you're a day trader, okay, if you're a day trader, then these are the three levels where you can look for sell positions. Okay, and if you're a hardcore day trader like me who cannot afford to go for any overnight positions, then you can simply switch to the hourly time frame as well, because you can see that on 1 hour time frame, okay, undoubtedly the market is in downtrend. Okay, I'm not debating that. Okay, but we can see that more or less at present the market seems to be sideways. Okay, if we simply focus on this particular portion of the market here, we can see a sideways kind of a market here. Okay, so if you're a hardcore day trader like me, if you're a scalper, okay, then you can also look for a buy position around 1.0850 to 1.0845. okay, usually in this type of market, taking a buy is little bit risky, but due to strong price rejection around this area, if the volatility of the market remains like this, listen to me carefully, if the volatility of the market remains like this, means market does not have enough volume. If there is not enough volume in the market, market usually do not go for breakout or breakdowns. So here you can expect a bounce. And usually on Monday we don't get to see much volume, especially during the first half. So if market bounces, you can look for a buy around this area. How much you can expect? You can expect around 25 pips. Okay, and on the other hand, 1.0900, 1.0895, the level I showed you, okay, is present here also. If market reverses, if you see that market is struggling around this area, market is showing price rejection from above, there also you can look for a sell position. Okay, so these are the trading opportunities that I see on the chart of EURUSD right now. And if you're wondering why I didn't talk about any support level, my dear friends, we don't have any strong support on the chart right now. 1.0800 or around 1.0780, the trend line from the daily chart, okay, is the only logical support that we can see on the chart of euro dollar right now. Okay, so this is my analysis. I can be wrong as well. If I have missed anything, please write down in the comment section. I would love to learn from you. After all, we are all students of the market. So please follow proper risk management. As I always say, my dear friends, capital protection should be your first priority. Do not gamble with your hard-earned money. If market is stuck in the middle, if your risk to reward ratio is not in favor, then obviously you need to learn when not to trade as well. As a trader, okay, as a trader, knowing when to trade is important, but when not to trade is also very, very important. Okay, so bye bye, take care, see you tomorrow.